This is clearly the start of a new bull market here. I think my price, I'm looking at Bitcoin crossing 200K in, the next, let's call it 18 months. There's a turning point in the industry right now. I would call 2025 a line in the sand moment for the industry. We have now moved into a game of haves and have-nots.
Welcome back to the show. You'll notice that my background is different because I'm traveling right now. I don't actually have a fireplace at home, but I do for the next couple of days where you'll see me here for the next couple of days. What else is traveling though is Bitcoin. Bitcoin's been traveling higher and the entire crypto markets have been following Bitcoin. Bitcoin has just hit the critical threshold of $80,000. And importantly, we're here to talk about when Bitcoin will hit $100,000. Probably even more important than that is where this entire new rally is headed into next year. Where will this rally take us? Where will it take cryptos? Which subsectors within crypto will do well? Which will not survive next year? All these questions and more, including why Hyperliquid is something to watch right now, will be answered by our next guest, Jason Yanowitz, co-founder of Blockworks. And right now there's a trade actually on Kalshi for when Bitcoin will hit $100,000, and traders are predicting a 29% chance that $100,000 can be reached by January 2027. If you agree with those odds, a $50 trade can yield a payout of $159 if you turn out to be right, and Bitcoin does hit 100K anytime before January 2027. This video is brought to you by and sponsored by Kalshi. It's the largest prediction market in the United States. And unlike a sportsbook, you're trading peer-to-peer on real-world events, from economic data to political outcomes, which means that the price moves on public opinion, not the house. Go to my link in the description down below or scan the QR code to get my access code LIN, L-I-N. If you use my code LIN, new traders can get $25 when you trade $25. Kalshi is CFTC approved and available in all 50 states, including California and Texas. Jason, welcome back to the show. Good to see you.
It's been a good year. It's been a good, maybe not for the crypto prices, but it has been a good year for Blockworks and a good year for life. So good to see you, David.
Yeah. Congratulations on everything that you've accomplished this year, including your acquisition of Asari. Now, Bitcoin and crypto, as you said, not a great year so far until now. What is going on right now? You've been pretty much bullish the entire time I've known you, since last year. And admittedly, the market has disappointed a lot of people, I'm assuming yourself as well. But right now we're in a bit of an upturn, and the question is whether or not this is a fake out, not a real rally. What do you think?
Yeah, I think this is clearly the start of a new bull market here. So I think, you said people have been disappointed by prices. I'd say traders have been disappointed by prices. I'd say investors are about to be massively rewarded here. So if you look at what's happening, I don't think crypto is reawakening because there's some head fake or some short squeeze here, right? I think, it's not moving because retail just rediscovered meme coins. It is clearly moving because the macro setup improved at the exact same time that the on-chain economy has become a lot more useful. And so all these things just hit at once, right? I'm sure you've talked at length about what just happened with the Treasury, right? The Treasury doubled the long end of the bond buybacks, kind of revived the debasement trade. Washington has completely flipped their tune on crypto. It went from, can this exist, to what are the rules of the road, right? ETF inflows are having their biggest week in 10 months. And I think the part that is most interesting, the part that probably your audience is really not tuned into, and the part that I care deeply about, is that the on-chain economy has barely contracted, over the last 12 months, while Bitcoin fell 50%. So, stablecoins are up to $300 billion in stablecoins. Solana just did 4.24 billion non-vote transactions last month. Hyperliquid generated $150 million in quarterly revenue. So I think yes, there were some positions that were offsides. There were $2.7 billion of shorts, that got liquidated. So yes, there was definitely a squeeze higher, but I would say the squeeze was the ignition. We are just entering a new bull market here.
Have you seen any on-chain activity that would demonstrate who has been buying in the last week and a half?
Yeah, okay, we can maybe go to what I'd call the off-chain pipes and the on-chain pipes. So let's use Bitcoin ETFs as an example. I don't think Bitcoin ETFs and crypto ETFs as a whole are super interesting, other than that they are confirmation that the marginal traditional investor is coming back in. So, I'm looking at Blockworks' data here, and I'm happy to share my screen if you want. But, if you look at,
Yes.
so here, I can pull up my screen here. Let's look at this.
You're able to share it now. There you go.
Great, great. Okay, so if we look at this data right here, what you can see, this is the week over week crypto ETFs total flows by asset here. So what you're looking at here is that we had several weeks, actually, many weeks in a row, minus $300 million of net outflows, minus 400 million of outflows. Then let's look at what started to happen around this time frame, which is $800 million of inflows. Our first $1 billion inflows week into crypto ETFs since May of 2026, back to back to back $600 million inflow weeks. So if you look at what's actually happening on the ETFs, right? US spot and ETH ETFs took in a combined $2.6 billion in last week. About $1.9 billion into Bitcoin, $700 million into ETH. It was the strongest combined inflow week since October of 2025. So the strongest week for crypto ETFs in 10 months. And then you look at the ETF trading volume, went to about $30 billion, which is 3 times greater than it was the prior week. So I think that answers one half of your answer, which is who's buying. So there's definitely this bucket of traditional capital markets investors, financial advisors, your mom and pop who has some money on a Charles Schwab account, and the institutional bidder, right? We saw, Stanley Druckenmiller put on a Hyperliquid position. You've got everyone across the institutional, angle is allocating, and then the on-chain flows are coming too. And I think if you look on chain, you've got a lot. There's a lot of folks who I think have gotten offsides on the AI trade, and I think a lot of folks who are starting to say, "Hey, look, I'm a tech investor. Yeah, I might be a retail tech investor. I might be an institutional tech investor. This AI thing seems a little too hot right now. What are the other asset classes that could be ready to go?" And I think crypto is the natural next step there.
I know about the institutional buying. That makes sense. What is intriguing to me is that on top of institutional buying, altcoins are pumping. Even meme coins are pumping. I'll pull up something later to show you, but I was looking at a bunch of smaller things. Even Trump coin went up 100% last week. I don't think Druckenmiller is buying Trump coin. I don't think he's buying Pepe, right? Those things moved up together concurrently with Bitcoin. And so the question is, why is everything moving up at the same time? Institutions are moving into the larger things. They're moving into the larger layer ones. And they're moving into Hyperliquid. That doesn't explain why the altcoins and the meme coins are also pumping as well.
I think that there's renewed excitement in crypto for the first time in 18 months. I think it's as simple as that. I think that the industry forgot how to believe in something, and that the industry now believes that this industry and asset class can come back. And there's a really clear reason for that, which is that, there's now a lot, for the first time ever, David, there's a lot of capital in the industry. So if you look at the stablecoin, yeah, this is an interesting chart that you're showing, but I would say what flows into these assets? Stablecoins, right? So there's now roughly $300 billion of stablecoins sitting in this on-chain economy. I like to think of stablecoins as the cash balance of the on-chain economy. And if you force me to watch one crypto metric for the next 10 years, I'd probably pick stablecoin supply over Bitcoin's price, right? Stablecoin supply, it's kind of like looking at how many websites were getting created in 2000. The dot-com bubble crashed. Prices went down, but more websites were getting created. That's what's happening with stablecoins. So Blockworks data now tracks over $300 billion of stablecoin supply. So when the market moves, it's incredibly agile because a lot of people are sitting on these stablecoins. So that's one thing. Then you also have these two economies, these two blockchains in Solana and Hyperliquid, where there's a lot of capital. So can I just, maybe I can walk you through some of the big numbers of Solana right now and the big numbers of Hyperliquid. So if you look at, I'll pull up my screen once again here.
Yes.
So if we look at if you go to Blockworks, if you just, Google Blockworks, Solana data, you're actually able to see this. Look at this chart of transactions happening on Solana, right? So Solana is now doing $4.2 billion in non-vote transactions every single month, right? July, all-time high, $4.2 billion of non-vote transactions. There were roughly 24 million trades per day on Solana. 24 million trades, 860,000 trader addresses. And the number that is really crazy to me, there are two numbers. One is the average spot DEX volume. So the trading volume of exchanges, of trades happening on Solana is $3.3 billion a day, about 2.3 times as much as Ethereum is doing. And the 7-day average throughput, so there's 2,100 transactions happening a second. The median fee on these transactions, and I think this is super important because I think a lot of your audience is used to maybe these like high fees on these blockchains. It's really tough to make trades. The median fee on Solana is not 1 cent. It's not 0.01 cent. It's 0.004 cents. So it's basically free to trade on these things now. And so I think that's, the answer to your original question is why are these coins going up? And I think it's as simple as people believe in the asset class again. And for the first time ever, there are applications and blockchains where you can freely, openly trade all the assets. And by the way, we should talk about Hyperliquid too. They're not just trading crypto assets. For the first time in history, you're trading traditional real world assets on these blockchains.
Let me show you something here. This is from Glassnode, and this is showing research for August 19th. Record short liquidation event ignited 20% rally off of mid-August lows. So what happened here was, in dollar terms, August 19th was the biggest day of short liquidations our feed has recorded since 2019. Across the squeeze window, 85% of everything liquidated was short side. One caveat belongs beside every liquidation read. Our feed aggregates the major centralized exchanges and does not include Hyperliquid. So the true total ran higher than anything we can measure. What happened on August 19th? I think I have the answer, but I'd like to get your read.
Yeah, look, so the Treasury blinked, right? So the approximate trigger here was macro. I think policy, so August, if we walk back, August 19th, I think you said, was that the date of that paper? So August
August 19th was when Scott Besson came on CNBC and other media and said, look, I think it was just CNBC, and said, look, we are doubling bond buybacks from $2 to $4 billion per operation.
So what happened August 19th, right? Treasury doubles the maximum size of the long end, liquidity support buybacks from, I think it was $2 billion to $4 billion. Bitcoin goes on a heater of a run, touches 81,000, on August 25th. It's up 28 or 29% in August. And what's actually happened is the narrative on this changed. So, I think the first thing that you want to talk about is the liquidations. The positioning. A lot of people were offside. So there was $2.7 billion of crypto short positions that were liquidated in a 24-hour period. So this is obviously an initial squeeze, right? I think you said, I think that was CoinGlass data. There's a record for short liquidations. That's definitely true. But the much more important thing, I've got a Reuters piece pulled up here. Mainstream financial media started to pick up on this. And what Reuters said, and I don't usually love to point to this, but I think a lot of traditional capital allocators are reading the journal, watching CNBC, reading Reuters, Financial Times still. Reuters explicitly tied the move to a softer dollar and a renewed debasement trade fears. So, when policymakers signal that they're less willing to let the long-term rates clear higher, right? The pressure has to go somewhere. Last week, the pressure, I guess 2 weeks ago, the pressure went into the dollar. So naturally, harder assets are going to rally. Gold, obviously, I think is probably your audience is probably very familiar with the gold trade. Bitcoin is just a higher beta, gold trade here. So that's exactly what happened.
Okay. I want to turn your attention to something else. Bitcoin Treasury companies lost $80 billion since the middle of last year. And in fact, this year in July, most of them turned to net sellers. Over the past 12 months, the fall was from $124 billion of value, combined market cap. $67 billion today, and falling $124 billion over the last year, a loss of $57 billion. The point is, a lot of them started selling this year. The narrative last year that a lot of them at least told media was, we're not going to sell. That wasn't the case. Given the market action and their subsequent action in response to market action, do you have a difference of opinion in regards to Bitcoin Treasury companies and their role in the markets today?
Yeah, it's a really simple story. Bitcoin treasury companies aren't doing well because the underlying assets aren't doing well. And I don't mean to make it boring, but I'd point your attention to a different treasury company here, which is Hyperliquid Strategies, right? David Seamus, Bob Diamond. Bob Diamond, I think used to be the CEO of Barclays. They run a, Hyperliquid Strategies company, It's one of the better performing assets right now. Look at the crypto holdings here that I've got up on the screen. They're now holding $2.4 billion, right, of Hyperliquid. And so this is what they continue to do is just continue to accumulate one of the better assets in crypto, which is Hyperliquid. And so, yes, some of the DATs have not done very well, and you can see that on our treasury companies. I'm not sure the data that you were showing there, but if you look at this data here, you can definitely see the aggregate NAV of these crypto treasury companies has come down, right? At the peak, it was $120 billion. At the trough is around 70, $65 billion. I honestly, I think some of these companies will I think it was good that some of these companies imploded, and I think some of them who hold good assets like Hyperliquid Strategies will actually continue to do quite well. I'm also looking at Forward Industries, Solana,
Hmm.
right? I think some of the assets that do well, like Solana and Hype, will do well on the treasury company side of things.
Is Hyperliquid primarily used as a leverage tool nowadays?
Hyperliquid the is the first venue in crypto, I would say, to break out of crypto. So if you look at,
Mm.
I'll stop sharing my screen here, but if you look at what the crypto thesis has been for many years is that, someday financial assets might move on chain, right?
Yeah.
Hyperliquid is the first evidence that that is actually happening. So I've pulled up some Blockworks data on Hyperliquid. We've got financials here. So our financials show that Hyperliquid did $154 million of revenue in Q1 of this year, $148 million of revenue in Q2. That is a $600 million run rate business. I think Hugging Face, it just got announced that Nvidia is buying Hugging Face for $13 billion. Hugging Face's revenue is
Hmm.
$150 million. So if you had
Oh.
a traditional fintech that was making $600 million in revenue in their third year of business, you've got a monster, you've got one of the hottest companies in the world on your hands. But because it's a crypto business, it's kind of, mainstream media doesn't take it too seriously, except for Bloomberg. They talk about it a lot. The craziest thing about Hyperliquid is because of the efficiency of blockchain rails, they have 12 or 13 employees. How many employees does
Yeah.
Robinhood have, right? They have thousands of
Wow.
employees. How many employees does Coinbase have? How about, Charles Schwab? These are huge businesses. Hyperliquid's doing 600 million in revenue with about 13 employees. And I think, David, your question is it all just leverage, right? So I'm looking at at yesterday's data. We're recording this August 27th. So August 26th data, they did about $9.6 billion of perps future volume. The most
Sure.
interesting stat there is if you break down where that data came from, about 2.75 billion, so 29% of that volume was in markets that Blockworks tags as real world assets. So the RWA tagged volume included, $1.8 billion in equities, 590 million in equity indices, $370 million of commodities were trading, and then you have smaller markets across FX, pre-IPO markets, and bond markets. And so to answer your question, directly here, Hyperliquid is doing well because it's the first app that has really broken out of the, crypto scene and broken out into mainstream markets.
I want to visit another narrative that was hot last year, and that's especially hot right before the election, the presidential election, which is the fact that the government may step in to buy Bitcoin. Has that happened? I don't think it's happened yet. And right now, I'm looking at prediction markets. Kaushi, will the Treasury purchase Bitcoin 6% before January 2027? Have people given up on that? Because that
I
was
don't
all
think
the hype.
Yeah, I don't think it's really something that has been talked about too much. And I think there's a bigger question here of has Trump, I think the real debate that is the right debate is not will the Treasury purchase Bitcoin? It's has Trump been good or bad for the industry? And
Yeah.
so I think there's the industry's probably split 50-50, right? I think that a lot of the stuff that has happened with World Liberty Fi and some of the other activities associated with that have been definitely net negative for the industry. But on the positive side, regulation has entirely flipped. So will the Treasury purchase Bitcoin? My real candid answer for you, David, is I don't really care. I don't think it makes that big of an impact. What I
Mhm.
care about is, are there real apps? Are there real apps and real companies who have real users and real revenue building in the industry? Because if we're entirely reliant as an industry on some external force buying up our tokens, it's not a real industry then. And it's the same reason I don't, think that MicroStrategy is that big of a net positive for the industry. I think if you become too reliant on one character, it's not actually good for the industry.
I'm going to leave this trade up as well, and I just want to leave this up while we talk about it. When will Bitcoin cross 100K again? Only 29% chance before January 2027.
Yeah,
A
this
lot
is
of
an
questions
easy
around
trade.
this.
Yeah, I've
This
actually
is
got a
an easy
long.
trade.
Yeah, I've actually got a
Okay,
long on this trade. So I'm yes on this trade. So if you look at, sorry, I cut you off here, but if you to finish
please.
to finish, I think what you were saying is before 2020 December 2026. So this or before January 2027.
Uh-huh.
Yeah, this is basically saying, okay, so it's climbed to 29%. Okay, so this is about where I think it actually should be, is around 30%. So before this, before January 2027, this is saying, will Bitcoin cross 100K really at any time in 2026? I think there's
Uh-huh.
probably a 30 to 40% chance that that happens. I took the yes, I took the over on that around 18, 19%. So I think 29% is priced a little too low, but around the fair market.
We're already at 80K, give or take. Yeah. So, yeah, 80K right now as we speak. And 80 to 100K, especially for Bitcoin, is not that big of a move. I'm curious as to why you're not a little more bullish right now on the next 3 months.
Oh, because we just had a massive move, right? We just went from,
Okay.
the low of the bear market. We went from, 60, 65K up to 80K. I don't want to get too aggressive here. And I would actually rather have things move slowly. I would rather have us, kind of ease up instead of these parabolic moves to the upside. And
Mhm.
look, I think my price, I'm looking at Bitcoin crossing 200K in, the next, let's call it 18 months. We don't need 100K this year. It's not something that, I'm desperate to get.
People need a reason to get in on an asset, especially if they've sold some of it. I'm talking about Bitcoin. First of all, before I get into the reasons for buying Bitcoin or perhaps selling Bitcoin, is the rest of the crypto market still dependent on Bitcoin for movements? In other words, is Bitcoin still the leader with which everything else follows, up or down?
Yeah, you will always have correlation, I think, but you finally have separation of these assets, I would say. I think the bull case, let me lay out the bull case here. The bull case for all of this, if you look at past cycles, the bull case was,
Sure.
I think we can really clearly explain it now that, and talk honestly about it now that we're out of those cycles, which is the bull case was, Bitcoin. I think investors would buy Bitcoin as a hedge against maybe inflation, or a hedge against the government printing too much money, or the hedge against, whatever debasement, whatever you want to call it. And all the other assets, these altcoins, as we called them at the time, would run with Bitcoin. I think that's what you're getting at is, are all these things just going to
Yes,
run with Bitcoin?
exactly.
Here's what's changed in the last 2 or 3 years. The bull case now is that crypto gets really, really, really big. I think the best bull case to lay out is that I think we used to think, is crypto going to become like finance, right? Finance is becoming crypto, right? Dollars are becoming stable coins, stocks are becoming tokens, exchanges are becoming protocols. Nasdaq is moving to 24/7, 365 trading and launching an on-chain trading venue. I think I've stopped asking, what is the next crypto asset that is going to do well, and I've started asking, which existing asset will eventually have an on-chain version. And so when I look at where this industry is going, every stock, bond, currency, and commodity will eventually be tokenized. And the venues where those things get tokenized and the information and data providers that power those markets will end up doing extremely well.
You mentioned Hyperliquid several times. Why are people, by people I mean institutions in particular, betting on the fact that a lot of assets are going to be moving on chain? I'm talking about assets that have nothing to do with crypto.
I think because it's already happening. So the problem with the traditional capital markets are that they run Monday through Friday, and they're open, only several hours a day. Well, what happens when there's an oil crisis because of a Trump tweet? That happens on a Friday night or Saturday morning. This is what
Very
happened with
true.
Hyperliquid, right? So that people want to trade. You end up having these. I think things gapping up on a Monday morning will be a thing of the past. I think that IPO markets not being priced to perfection will be a thing of the past. Why? Because you'll be able to trade oil 24/7, 365, and you'll have these pre-IPO markets. And that applies to every single asset. So, if you look at just yesterday on Hyperliquid, there were $1.8 billion of equities futures traded, right? There were $400 million of commodities futures traded. And again, this is for a 13-person team. And so you've got, $2.75 billion of traditional assets. These are not crypto assets. $2.75 billion of traditional assets traded. This is perps futures volume traded in just one single day on Hyperliquid. And look, if you are a trader, this is just providing a better platform for you.
Again, I'm not just singling out Bitcoin here. I'm just using this as a benchmark for where the crypto market is headed. I saw this today. Debasement trade. This is CNBC Markets. Debasement trade to take Bitcoin to $300,000, says Bernstein. Bernstein analyst said Wednesday on a note to clients. That's 285%. We're nearly 4 times by 2029. I gotta say, Jason, I've seen this kind of headline quite a lot, especially when prices are moving. And whenever I see this, I get worried. Whenever I see like 300K in 3 years, whenever prices are moving up, because you don't see this headline. Like I didn't see this headline in July. I didn't see this headline in June. But all of a sudden things are moving up. I'm starting to see this. I'm starting to worry. What's your take?
Yeah, I look, the sell side analysts are paid to kind of put out these, they get attention when they put out hyperbolic things. 300K in 3 years, extremely reasonable. I would say extremely reasonable. 300K in 3 years. I don't know if it happens though. I've truly, what I really
Nobody
care
knows.
about, and this is less interesting to your audience, I understand. What I care about is that there are real companies building real products, because that is, in 15 years of crypto, we have built an industry, we have built the networks and the protocols to support real activity. And now is the first time in history that we're seeing real activity. It's like when the internet was created and you just had all these protocols, TCP/IP, HTTP, right? That is SMTP. What I want to see is I want to see Gmail. I want to see Google. I want to see Amazon. And that's what we're finally starting to get in this industry.
Yeah, tell us about the real companies that are being built right now. And more importantly, in this new bull cycle that we're experiencing right now, what are the types of protocols and types of projects that are likely going to survive and the ones that will not?
Yeah, I think there's a turning point in the industry right now. I would call 2025 a line in the sand moment for the industry. We have now moved into a game of haves and have-nots. And what I could otherwise describe that is as a entrepreneur building in the industry, you could kind of get by for the last 15 years. You could kind of get by, run your nice little company. Now you have to decide as a founder, do I want to consolidate or do I want to be consolidated? And so I think what you're about to see in the industry is a lot of consolidation, a lot of M&A, and I think you're going to see a lot of people touch the public markets, right? A company like Blockworks, we're at the phase where we start to say what do the late stage venture markets look like and what do the public markets look like? And I think you'll see, right now we have Kraken on the door of going public. Coinbase is a public company. Robinhood's a public company. BitGo's a public company. Circle's a public company. But really, that's a small number. It's like 4 or 5 crypto companies are public. Figure, obviously. I think you could see, 2025 publicly traded crypto companies, in the next 18 months.
What are you suggesting? Are you going public soon?
I don't think Blockworks will go public soon, but I think that we look at how do you become a consolidator in this market, right? We just acquired our biggest competitor, which is Masari, and I think we'll get, continue to look to be acquisitive and continue to scale this company as quickly as possible.
This is my final question. We'll end up with the conversation here. Blockworks, your strategy, how has it changed in the last 3 weeks, given this new rally? Not even 3 weeks, let's say 2 weeks and a half. Have you had internal discussions about, okay, we've just entered what looks like a new bull cycle. How should our corporate strategy change? Have you had these discussions?
The strategy changed about 15 months ago when we said, look, we are going to become a consolidator and we do not want to be consolidated, right? And so that's when we said, let's go all in on scaling this as quickly as possible. And if this market does not turn and we don't get a bull market, we risk we risk, maybe there's no Blockworks, but if we come out of this alive, we will win this market. And so I think that was our strategy about 15 months ago. And look, it's starting to pay off, right? We're building a Moody's or an S&P like business of the on-chain economy, right? Moody's is an $80 billion business. S&P is a $120 billion business. Blockworks at our, last valuation was around $200 million, right? So 200 million to 120 billion. We've got a long way to go here. I'm not gonna, my mental math is, what is that? 720x from here. So we're very, very, very early days for the company. And yeah, we're excited.
Well, congrats on building a $200 million business. I mean, even though it's now 120 billion, that's still quite a feat of achievement. So congratulations on all your success so far, and especially this year. Jason, wonderful talk. Thank you. Where else can we follow you and stay up to date?
Yeah, David, thanks a lot. I'm on Twitter. I'm pretty active on Twitter at Jason Yanowitz. Anyone, my DMs are open. Someone can reach out. My email is just jason@blockworks.com. And then we've got a lot of free public open data. All the data that I just mentioned with David is all free and open on our website. Just, Google Blockworks data, Blockworks analytics, or go to blockworks.com.
And thank you for watching. Please do like and subscribe. Follow Jason in the links down below. And please use my code LIN, L-I-N, when you sign up to Kalshi. Remember, new users can get $25 when you sign up and trade $25 for the first time. Link down below or scan the QR code here.